Hello and welcome to this week's episode of Trading Insights, your go-to podcast for everything Forex. I'm your host, FX Videos, and today, we're breaking down the major Forex news from this past week and diving into key insights for what's ahead. If you're a trader or just someone keen on the financial markets, you're in the right place. Let's get started. It's been a roller coaster ride in the Forex markets this week, with volatility at the forefront. Let's begin with the headline events that moved the markets. The US dollar index, DXY, had a strong showing this week, fueled by the release of robust employment numbers. Friday's nonfarm payrolls report showed an addition of 250,000 jobs, beating expectations of 180,000. This data strengthened the narrative of a resilient U.S. economy and led to renewed speculation that the Federal Reserve might keep rates higher for longer. We saw US dollar to Japanese yen pushing past the 147.50 level, while euro to US dollar dipped below the critical 1.08 mark. Traders should keep an eye on how these levels react as we move into next week. The euro had a rough week, as softer-than-expected PMI numbers pointed to weakening economic activity in the Eurozone. Germany, in particular, remains a concern, with its manufacturing sector continuing to contract. Add to that the dovish tone from European central bank officials, and it's no surprise the euro struggled. If you're trading euro to US dollar or euro to pound sterling, this is a trend worth monitoring. Emerging market currencies faced headwinds this week as higher US Treasury yields pushed investors toward safer assets. The South African rand and Turkish lira were particularly hard hit, with USD/ZAR climbing to multi-month highs. Central banks in these regions are grappling with inflationary pressures while also trying to manage currency stability. It's a tightrope act that's worth paying attention to. Now that we've recapped the week, let's look ahead to what's on the radar for next week. First, the U.S. inflation numbers are set to be released on Wednesday. This will be a crucial data point for traders gauging the Federal Reserve's next steps. If inflation comes in hotter than expected, it could reignite bets for another rate hike, potentially pushing the dollar even higher. In the UK, we have the GDP data coming out. With the Bank of England's recent pause in rate hikes, any indication of economic slowdown could weigh heavily on the pound. We've got several central bank officials slated to speak next week, including Fed Chair Jerome Powell and ECB President Christine Lagarde. Traders will be dissecting their comments for any hints on future policy directions. Geopolitical developments are always a wild card. Tensions in the Middle East and the ongoing war in Ukraine continue to add layers of uncertainty to the markets. Be sure to factor these risks into your trading strategies. Let's move on to our forecasts for key currency pairs. Remember, these are insights based on current data and technical analysis, not financial advice. Always do your own research before making any trades. With euro to US dollar closing below 1.08, the pair looks poised for further downside. Key support lies at 1.0750, and a break below that could open the door to 1.07. On the upside, watch for resistance around 1.0850. The pound is likely to remain under pressure ahead of the GDP data. If the numbers disappoint, pound sterling to US dollar could test the 1.25 level. However, a surprise upside could push it back toward 1.2650. With the yen under pressure from rising US yields, US dollar to Japanese yen could aim for the 148 mark next week. Intervention risks remain, so keep an eye on any comments from Japanese officials. Gold has been struggling to regain its footing amid a strong dollar and rising yields. The $1,900 level is crucial support, and a break below that could trigger further selling. On the upside, resistance sits around $1,925. Before we wrap up, here are some tips to help you navigate the markets next week. Economic data releases and central bank commentary can change the game. Make sure to stay informed. Volatility can be a trader's best friend or worst enemy. Use stop-loss orders and manage your position sizes wisely. Don't put all your eggs in one basket. Consider trading a mix of major and minor pairs to spread out your risk. That's it for this week's episode of Trading Insights. Thank you for tuning in. If you found this episode valuable, don't forget to subscribe, leave a review, and share it with fellow traders. You can also follow us on social media for real-time updates and insights. Until next time, happy trading, and may the pips be ever in your favor.